Welcome back. We are watching a serious sell-off underway on Wall Street this morning. We're talking about a 1,250-point sell-off right out of the gate this morning for the open, for the Dow Industrials. The NASDAQ down 410 points and the S&P down 145 points. The stock market is reacting to the oil market. Oil is the big story this morning, as well as interest rates. That's really what stocks are reacting to. Oil prices plunged after Saudi Arabia cut prices. As you can see, last week we told you that OPEC wanted to cut production. The Russians would not go along with it. The Saudis cut prices. Now this is the fight between the Saudis and the Russians. And in the middle of it, you've got crude oil down 22% right now at $31.91 a barrel. This is a serious sell-off in the price of oil. The yield on the 10-year Treasury also falling below 0.5%. Take a look at where the 10-year yield is at 0.471%. This is an extraordinary number, down 30 basis points. Joining us right now is Michael Lee of Michael Lee Strategy. And what is the strategy this morning, Michael?
So we are in a full-on panic, right? And it's just wild. So if the market sells off when oil spikes higher, how can it sell off when oil spikes lower? When oil goes lower, it's inflationary. This is a stimulant to the U.S. economy. The price of oil is not driven by economic demand. As you can see today, it's driven mostly by the Saudis and an OPEC cartel. So I think this is underlying good news with the price of oil going down. The energy sector, which is going to feel some pain here, is the smallest sector of the S&P 500. We'd like to see them do well, but on an overall basis, this is a net positive for the U.S.
It's a positive, but what it can trigger is the negative. I mean, when you got oil prices at these levels, as Dagan mentioned earlier, this can be a serious situation for these companies with facing debt. And then they will default, and then the crisis feeds on itself. I mean, that's, I think, what the market is worried about with the sharp sell-off in oil.
In theory, but there are ready and willing players, as Kelly Jane mentioned, like Warren Buffett, sitting out there with piles of cash, ready to swoop in and take over these companies. We already went through this a couple of years ago. We recovered. This is a bit of hysteria right now. What I think is the underlying.
It might be, but we're trying to explain to investors why the stock market, the broad market, is reacting to this. And it's not just oil companies defaulting on its debts. It's also concerns about travel and leisure companies. It is any company that is directly hit by this global coronavirus. That's why the market is panicking, and it is panic. But these are very real concerns about whole industries. Let's talk about the insurance companies. Watch those, because who have, say, the hotel chains and the airlines bought insurance from to cover business interruptions.
So what I can say is markets can handle good news, markets can handle bad news. What markets cannot handle, and what you're seeing right now, is uncertainty. We have no idea if this is going to be a 1 business quarter event where we have a catastrophic economic fall off, or if this is going to be a 3 business quarter event. Yeah. I tend to think that it's going to be 1 to 2 business quarters, and then you're going to start to get some news that the sun is coming out, tomorrow is going to happen, and when that happens, the market's going to absolutely take off. We're going to look at a series of unprecedented fiscal and monetary stimulus.
And Mike, you mentioned this kind of happened before to some degree as far as an oil panic, just even recently into 16. I mean, we had a major panic into February of that year, and it was going to be this oil at $20 for a long, long time, dividends being cut, etc. Guys like Buffett were hopefully going to come in and take care of this problem. Well, guess what? Oil actually rebounded and came back up, and dividends weren't cut. So maybe this is a similar situation, but I agree with you too, Dagan, in the sense of putting a coronavirus scare or freak out on top of all this when the oil markets, it's a very tough thing to surmount.
You mentioned the response by Congress. That Goldman Sachs report says that these fiscal measures that they're expecting from Congress could be as much as 1 to 2% of GDP. A fiscal package from Congress as much as 1 to 2% of GDP that they are enacting in response to the coronavirus crisis.
Maria, with a 30-year Treasury below 90 basis points, why wouldn't the government shoot every bullet or fire every shot they possibly can right now? So when you look at the other side of this, when we can kind of quantify the damage and the recovery time, I think the market makes new highs. That could be as long as 2 years from now, but we are going to enter one of the most oversold conditions we've ever entered.
Yeah.
Every single time in the top 20, 2 years later, the market's higher, and like 95% of the time, the market's higher 1 year later.
So are you buying into this selling then? Do you want to actually look for opportunities in today's sell-off?
Yeah, absolutely. Well, look, you have the 30-year Treasury paying you 90 basis points. That's half of the dividend, less than half of the dividend in the S&P 500. Where are you going to make more money over the next 30 years? Where are you going to make more money over the next 10 years?
Yeah.
Look, this is hard. Everyone says you got to buy low, sell high. It's just not that easy. We may end up, may end up a little bit lower or a lot lower. Always keep a little bit of cash, but go out there, look around today. Some of these energy names, paying 7 or 8, 9% dividends.
Yeah.
Those dividends might get cut, but even if they get cut in half,
buy more.
There's still a lot of place to play. So look, this is unsettling. It reminds me of the financial crisis, working at Morgan Stanley when the stock closed at 6 on a Friday, wondering if I'd have a job on the Monday morning.
Yeah.
But these times of panic, these times that are unsettling, often prove to be the best times.
Yeah, no, I agree. It will be better on the other side for sure. But right now,
we don't know when the other side is.
In the middle of this storm.
Yeah.
Michael, it's good to see you.
Thanks for having me.
Michael Lee joining us. Coming up, a city rebuilds a church service in Nashville amid the rubble.